Inflation, inflation, inflation. It is the headline of the day, isn't it? We look at what's happening in inflation. We look at our federal government, Bank of Canada saying
things are coming under control, slowly slowing down.
And ultimately, as I guess consumers, we look at the prices of things are not coming down. The speed of which prices are rising is slowing down. That's the CPI conversation. But then we look at Canada overall and we say, well, economically, things are slowing down. We see inflation appearing to slow down. But when we look at Alberta, you see these hotter economies, and Alberta is a perfect example of that. Hot economies drive the speed of inflation, drive the speed of which inflation goes up. Alberta is a perfect example of what it means to be in an inflationary environment. Now, having said all of that, when you look at Alberta, relatively speaking, inflation, as much as it seems quite high, and if you live in Alberta, you're saying it is high. When we look and compare across the country, Alberta is still relatively inexpensive. So we can't talk about inflation without looking at what makes up inflation and why we continue to see things increasing. Certainly we look at the cost of food, the cost of fuel, the taxflation. I mean, how can we even describe that? It's not worked into the numbers. But when we look at interest costs as part of our mortgage payment, that's part of it. We look at rental costs, which are continuing to escalate. My point is this, is when we take shelter costs out of inflation, then you start to see that we've got a pretty subtle, if you will, a much slower rate of inflation. Now, I still don't think that's going to be enough to have Bank of Canada reduce rates. That's a different conversation. But ultimately, we look at inflation and we see just how big an impact shelter costs are having on our inflationary environment, as you can see here in this particular chart. When we take shelter out of it, guess what? We're actually below target. So as much as inflation and taxflation will slow an economy down, the one thing we have to consider is the cost of debt. Now we look at government debt and we've, well over $1 trillion. Our payments on that debt are off the charts. Our taxes are continuing to go up. This is all playing into the lack of disposable income for people to put in and spend into the economy. And then, of course, we also have to look at the household debt, which is the amount of debt that each consumer is carrying, whether it be credit card debt or a car payment, for example. But certainly when it comes to housing, that debt has gotten bigger. And we can see right across the country. When you look at this chart, it makes sense that you look at British Columbia, Ontario, then we go Canada overall, but Alberta, Manitoba, etc. And that really speaks to the cost of housing in each of those provinces. And so it makes sense that there's more debt along the lines of the cost of housing in those provinces. It's all to say this, is interest rates continue to stay high. Cost of living continues to stay high. This slows down the economy because of disposable income or lack of disposable income. So that doesn't negate the fundamental fact that people still need a place to live. So as we go into the future, as we look into the future, housing continues to be a challenge from an investor point of view, but it's up to us to actually fill the gap that is being created. This goes back to shifting our strategy given what's happening economically. So household debt driven by the cost of housing, the challenges of first-time home buyers or next-time home buyers actually getting into the market, we start to see is the affordability of it all is problematic. This next chart really shines a light on the fact that when we look at affordability, condos seem to be and are, in fact, the most affordable part of housing. When we look at detached housing, they're not building more. We're actually trending down. So that affordability is not going to change anytime soon, in spite of the government's billions of dollars and their commitment to build however many homes they're going to build over the next 10 years or whatever the number is. The point is this, is that housing continues to be Canada's challenge. The data supports that economically, we're still remaining relatively strong given what's happening in the world today. Interest rates will, in fact, eventually come down, but they're not going to go down in a meaningful way anytime soon. And that for us as investors, keeping our capital at work in real estate continues to be a very robust strategy, if you will, or an effective strategy for staying ahead of these inflationary curves that we're dealing with and will continue to deal with into the foreseeable future. So as I bring this to a close, I'm going to end on this particular chart, which really just shines a light on what I've been saying. And that is that when we look at the single family construction, it's basically plateaued, as they show here in this particular chart, whereas multifamily will continue to trend up, and we see that a lot of building is happening, which is the opportunity for you, if you're savvy, sophisticated, and you have the time, the energy, the knowledge to play in that multifamily space, then I think that's great. Go search for those opportunities and invest in those deals. For those of you who don't have that savvy, that level of sophistication, then going into that REIT fund LP kind of scenario with multifamily investing on the other side of it, that is in fact where the money flows. So when we bring this all together, when we look at all of the data, ultimately we look at real estate and say, yes, the argument for real estate remains really strong, investing, getting our capital to work. Then we change the strategy based on what's happening economically. We can look at the headwinds of getting mortgages, finding cash flowing deals, finding deals at all, and or we can look at the opportunity to put our capital to work, investing in another way, shifting our strategy. That's my invitation to you to consider. Don't sit on the sidelines. Get your capital to work. There's more ways to invest in real estate than just to do it yourself, stand alone. Look at those opportunities, take advantage of them. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.